Hello everyone and welcome to a new video. Today we are going to discuss about the Chief Minister's Rojgar Yojana, that CMRY, which has been updated 2023 with a lot of useful things. Now, before I can proceed with the details, a short disclaimer over here. The purpose of making this video is only for creating awareness for entrepreneurs about this particular scheme. I am nowhere associated with any organization nor the EDC, etc. Terms and conditions, parameters, and other aspects are subject to change by EDC at any point of time. So kindly visit the EDC branch or the EDC website for the current updates after watching the contents of this video. So let's move and understand the highlights of this particular loan. So the first and prominent thing is that this loan is for proprietorship firms. So this is not for partnership or OPC and other private limited, public limited companies. This is for sole proprietorship firms only. The good thing is that with the 2023 scheme, the earlier age limit, which was 45, has now been extended to 50, and for reserve categories, up to 55, that is SC, ST, etc., and certain exceptional cases as approved by the committee. Then earlier, this scheme was open for new businesses only. That means if you have already set up an existing unit, an existing business, you couldn't apply for this particular scheme. It was only for newbies or first time entrepreneurs. But now you can apply for it for expansion of your existing business or unit. Earlier there were restrictions on the net family income, so there was a barrier which was there. So if your net family income was exceeding a certain threshold, you wouldn't be eligible. Even that restriction has been removed. There is 90% funding for males and 95% for females in reserve category. That means you need to, as a promoter, just 10% capital of your loan amount is sufficient for starting this business, and rest up to 95% is going to be financed by this particular scheme. And the rate of interest, which is actually 8%, but with a 6% rebate, the effective rate of interest becomes only 2% per annum. Now this is in short the highlights for people who don't have the patience to go through the video for long. So I'm going to explain this in details over here, having been to this particular session yesterday. So the eligibility criteria, as I told you, the age from 18 until 50 years. So it's relaxable by 5 years in case of widows, disabled persons, scheduled caste, scheduled tribe, and other backward classes. Besides that, if you are in the general category and if you fall into the 50 to 55 bracket and you have a substantially good plan, and if approved by the committee which is there, then also possibly you can apply for the same. Now the educational qualification, it requires a mere 8th pass. You don't even need to be even SSC passed over here. So basic educational skills are sufficient, but preference is given for those who have technical professional qualifications like ITIs, diplomas, engineering, doctors, nurses, dentists, etc. The eligibility criteria for the same. The family income, as I mentioned, the income ceiling restrictions have been removed. The domicile, you need to be a permanent resident of Goa for at least 15 years. Defaulter non-eligibility. Now here you should not be a defaulter to any nationalized bank, financial institution, or that for that matter any cooperative bank. Now how much loan you're going to get? Now maximum 25 lakhs. Now this is for professional degree, diploma, ITI, those categories which I've mentioned over there. And for rest of the categories, it's a max of 20 lakhs for other categories. Now, what are the means of finance? This is how the distribution occurs. The source, okay, you can see over here DITC, that is, I guess, it's the Department of Industries, Trade and Commerce, I guess. So they are for the general category over here. Their share of capital is 50%, EDC 40%, promoter's contribution is 10%. The promoter here is you. In case of a woman or disabled or other reserved categories, DITC shares is 50%, EDC 45, and the promoter's contribution 5. So 95% is pumped in by DITC and EDC, and the rest 5% is your own contribution. Then for ST categories, the bulk of the funding and finance is done by DITC, and EDC provides 15% only, and the rest 5% is done by the promoter. Rate of interest over here, as mentioned earlier in the summary and the highlights, it's 8% per annum. So there is a subsidy, that is an interest rate of 75%, which is 6% per annum. And there is a condition that subject to the unit being in operation and regular payment of EMIs. This means that you cannot take a loan for X purpose, and then after getting the loan sanctioned, close down the unit or the enterprise. That enterprise needs to be running, and when you're going to pay a regular EMIs, like supposing you have paid your regular EMI of 8%, immediately your 6% would be credited interest to your account. For the finer details of how this works, of course, EDC is the best this thing. But as mentioned, there isn't supposed to be any riders or anything like that. So it looks quite transparent. Effective rate of interest being just 2% annum if you do it mathematically. Now, the repayment schedule, in case you're going in for vehicles like taxis or other commercial vehicles, it's 5 years. And for other activities or any other businesses, it is between 5 to 7 years, depending on the business. There's a penal interest of 2% if you are a defaulter. And the moratorium period is a max of 1 year. So that means during this period, you can defer paying the EMIs. Supposing you launched your business, you don't have the funds to pay back, so you can defer the payment up to 1 year, which is the moratorium period. But during this period, you will be charged the interest. Now, collaterals. What are the collaterals required? Now, for loans up to 2 lakhs, personal guarantee by the applicant and spouse, and in case of married person or parent relatives, blah blah blah. So basically over here, just a personal guarantee should sort it out for you. In case of loans above 2 to 6 lakhs, you would require one guarantor over here, one or more guarantors depending on the loan amount over here. Now, such guarantor can be government employee or all these terms and things what has been laid down by EDC. For loans above 6 lakhs, you would need a notarized copy of ownership documents of the property, etc., which is there, and the guarantor should not be a defaulter, etc., with any banks, institutions, etc. over here. Now the fee structure over here, if you want to check it out, you can walk into EDC, pay the fee application form of 100 and draw it. Take the application form. The processing fee is 500 plus GST for loans up to 5 lakhs, 5,000 plus GST for loans up to 5 lakhs, above 5 lakhs, sorry, and SC/ST applicants will be charged a fee of rupees 200 plus GST irrespective of the loan amount. For other terms and conditions, basically projects with fixed assets are not eligible, without fixed assets, sorry, and the working capital is restricted to 40% of the project cost. That means supposing you're starting, let's say, a cloth manufacturing business, 40%, which is your RM cost or whatever. So let's say you have asked for a loan of 10 lakhs, only 4 lakhs will be paid for the cloth, etc. So rest 60% will be for your fixed assets. The cost of land cannot be covered under the project. existing units, or this is for with units which have been set up and which have no dues can also be considered for the loan. That means even existing ones which have already availed such facilities, and it is restricted to one loan per family. So here family as in like it's you, your spouse and your kids, your siblings, etc., won't be considered as one family. For detailed terms and conditions, I would again recommend you to kindly visit the EDC website or the EDC premises. Now, a couple of downloads over here which are there available on the EDC website. If you want the full term sheet and the entire details and the updated details, you can visit the EDC website. This is the link, edc-goa.com. And second is for loans above 10 lakhs, you would need to submit a project report. Even that project report is readily available on the website of EDC. I'm going to be sharing the links in the description. So you can go ahead, download the project report. I will show you the project report also, how it looks like. So this is the project report. It's in Word. So you can see everything is blank, like the details of the promoter, details of the project. Over here, location, business and marketing strategy, approvals, list of machinery, etc. And everything is sorted out here for you, like what are your sales projections, etc. So basically this is the project report, so you don't need to go how to do, what to do. You can just download this particular project report from the EDC website, fill this up and go to EDC. Based on my own experience, I can tell you that the team at EDC, they are very cooperative and very supportive towards entrepreneurs. So I would definitely recommend people to avail of this scheme, especially which has been brought out by our government. So this is a good opportunity to be independent and create employment opportunities for others also. So I'm sure this is just as I've liked this particular thing, and I'm trying to create awareness. I'm sure you would also would want to share this with other of your friends, family, who would possibly want to take up this opportunity. So please do share this video across so that many people can avail this. Do like it, and thanks for watching.